Hey guys, welcome back to the channel. I wanted to jump on and do a second stream today just because we're seeing very volatile markets right now. And I just want to really have the finger on the pulse and keep you guys informed of everything that is going on as it breaks. So, unbelievably, we are now actually seeing a green day for Bitcoin. Bitcoin now completely flat on the day here. And obviously, when I brought you the stream earlier, we were literally breaking down from the open. If we just go to the hourly chart and sort of do a little bit of a damage report as to what has happened today with the Bitcoin price, because at one point it did look like we were going into full-on meltdown mode. So the stream I did was about an hour before the open. So it was around about sort of 1 o'clock. So we were sort of down here. We're down around about sort of 90,000. Obviously, we got the wick down at the US Open, completely flushed out all the liquidity down to around 89,500. Obviously, I talked about the potential for us to go down to around 89,000 earlier on the stream today. I basically said we were getting sort of this move now, this sort of move down. Obviously, these lines are not to scale, and since then we sort of come up and we're starting to push on higher here. So this is a real sign of strength, by the way, from the bulls. You would be very hard pressed to find any sort of YouTuber, content creator, analyst, expert that thought we weren't going to go lower. A lot of people were saying that 85,000 was pretty much a given for the market. And yeah, I had talked about us coming down potentially as low as 88, maybe 89. Obviously, 89 and a half, well within my target in terms of the range that I expected us to come into. And just going on to the daily, obviously, I was talking about the 100-day moving average that I thought might get tagged. Obviously, if we continued to see weakness, but actually, from a very weak start to the day, we have reversed. It is Monday after all. A lot of the time, the Monday move does get faded. There's a saying that we often see turnaround Tuesday. So, are we going to see a turnaround Tuesday where this market starts to rip higher? Obviously, I'm going to get into sort of a bit of a preview of the economic data that's coming out both tomorrow and on Wednesday. We've got PPI, so the PPI, and then which is producer price index, and then CPI on Wednesday, which is the consumer price index readings for the month of December for the US. So this is the big data that the market is obviously focused on, and I was messaging some other traders that I'm in a group with earlier, and I was just like asking the question, like, how much more worse can this get? Like, is this not peak fear where we are at right now? I mean, inflation's ripping higher, interest rates, we've been told there's going to be potentially no cuts on the table for 2025. Um, what else? We've got this overhang of this Silk Road seizure, US government apparently, finger on the button, about to push sale on, $6.5 billion worth of Bitcoin. It seems like everything is just so negative. People are calling for cycle tops. People are saying, we've made a lower high. We've got all this bearish divergence and the cycle highs in. People looking at the monthly chart and saying there's, a shooting star candle. It just seems like everything is like max panic, max fear. Obviously, we talked about the fear and greed coming down to 50. Will we see a tick below in the fear and greed indicator tomorrow? I do wonder. Obviously, we can take a look at it now. I don't think it's updated yet. I think it updates. It might be 11 o'clock. It might be midnight. We're still in greed at the moment. So it is saying that this is updated on the 13th. So I don't know if this happened in the early hours. The next update will happen in 11 hours. Okay. So we probably will know by the stream tomorrow morning what this new reading is. And yeah, I'd be interested if we haven't sort of come back down into the neutral range. But yes, one thing I did want to look at, well, a couple of things I wanted to look at. Firstly, is the liquidation heat map. So let's just look at what we've done and what we've got in terms of our orders. This is like sort of zooming out a bit to the 2 week, and you can see we took out a lot of the liquidity below price. We don't really have much else below price now until much, much, much lower down, based on if I go to like a 1 or 2 month view. And we can see now we've got liquidity which is above the highs from the weekend. So potentially the market makers are now going to run us higher, target that liquidity, and then it could be that this happens over the next 12 hours before we get the PPI data. And then I think really that data will dictate what we do in the short term. In the long term, I do think even if the data does come in hot, that the market has lowballed its expectations so heavily for 2025 that really, even if we do get a hot number, I'm thinking like this market is close to a bottom. And even if the numbers do come in higher than the forecast, I do think those could be numbers that we see the market actually put a bottom in on, because of course next month forecasts will probably go up even higher. Obviously, it's important to remember that when it comes to inflation, what is inflation? Well, it's the price of those products and goods and services that we consume. It's the increase in those prices. Obviously, we have supply push inflation, demand pull inflation, different ways that the market can sort of prices can go up, different factors that sort of contribute to this. But if we actually think about what is going on right now in the economy, then we can sort of say, well, the dollar's very, very high. So what does a strong dollar mean for the US? It means that imports are going to be cheaper. So if US companies can basically sort of get sort of cheaper imports, then there's not going to be any inflation to pass on to the consumer through the production line, through the actual cost of producing the goods. So that sort of takes away the effect of any supply push inflation. When it comes to demand pull inflation, what we're saying is this is when people's wages are higher, this is when demand for products goes up, and you kind of get that demand pull effect. You get more demand, so naturally the price of things goes up to meet that demand. You go along the sort of demand curve, right? But in this situation, like obviously we've also got wages not keeping track of inflation. We've still got interest rates very high, which means it's hard for people to borrow money. So I don't know if the demand is really coming in as high as it has been like previously. And then you've also got the fact that demand from overseas, offshore, is going to be less because, of course, a strong dollar means that exports are now more expensive. So really the strong dollar plus the sort of restrictive interest rates, which are still up at close to 5% in the US, the combination of those two things should mean that inflation does naturally start to come down. Might not happen right away. Obviously, the dollar's up significantly from a couple of months ago. I think I looked at it earlier and it's up like 10% from over the last like 70 days. So, of course, this might not be a big factor up until in for this month's reading, which is looking at December's inflation data. But if we then think about, well, is this going to have an impact on this month's inflation, which is obviously going to be January's, which will be reported in February, then potentially it will. So I'm thinking February, March, we start to probably get cooler inflation reads. And it is my prediction that by the end of Q1, we are then talking about the US Federal Reserve making rate cuts again. So let's just actually look at, firstly, we've got the PPI. So obviously PPI comes out tomorrow. It's going to be before the US market open. And you can see the forecast has been moved up to 3.4%. So, it's not like we've got like the actual at 3% last month, and now we're going to come in with a forecast of, say, for example, like 3.1 or 3.2. It has been hiked up to 3.4%. Obviously, last month we came in hot. We came in 0.4% higher. So that obviously put some pressure on the market and obviously resulted in the Federal Reserve then being a lot more hawkish at their December meeting. If we do see, I think the market's expecting a hot number. I think the market is probably expecting this to come in potentially above 3.4%, maybe 3.5, 3.6%. I do think if inflation does come in, does come in 3.4%, I think that's going to be good for the market. 3.4% or lower, I think is going to be a great result for the market, because then people start to look at CPI and say, well, if PPI has gone up to 3.4%, then and it's not gone any higher, then potentially does CPI follow the same trend and also come in line with the expectation? Because obviously we see PPI coming in above expectation, CPI also came in above expectation last month. So obviously we had a hot number last month. If we then look at CPI, which is definitely the more meaningful measure, the more important piece of data, obviously we had it coming in line next month. It has been increased again by 0.2%. So again, the forecasting of this does tend to be more accurate. But again, if we see PPI coming in, that will probably be a leading indicator to what happens with CPI. Hopefully, PPI comes in line, and hopefully, CPI also comes in line. I think even if we saw a slightly higher reading of 3%, I think it wouldn't necessarily be a death sentence. Potentially, we would sell off from that figure, but I think the markets will probably pull around. And based on the price action we've seen today, potentially the markets have now bottomed. I really think this number is like the most important inflation read we had for a long, long, long time. That's why I'm giving it some extra attention this month. And look, if we just go back to our charts, then yeah, I think all eyes are going to be on this economic data. And like I say, if this economic data does come in line or lower than expected, then I really do think that I'm putting my neck out here big time. But I really do think that this would lead me to believe that the low for the market has been made today. But this can change very, very quickly. I mean, literally in the space of what, you know, since the market opened, since about 3 o'clock, we're now at 10 o'clock. So in the space of about 7 hours, we've made this move up. You betcha that if we get some, hot inflation figures, this market can dump super, super fast, twice as quickly over the next like day or two, over the next week to lower prices. So it's good to have a little bit of air now between our low and where price currently is, but it doesn't mean to say that we're not out of the woods yet. And of course, there's gonna, yeah, I think as a trader, look, I said on the stream earlier, I started to, buy some ETH around the 3,000 mark, started to buy some more Solana. Certainly those positions, I'm happy with the fact that I did make some entries today. Look, I'm really in a position now, and I think most of you, or certainly most traders, should be in the mind frame now that, look, we've seen the bounce. Often when we get strong bounces, they do like to come in for retests after we make significant lows. That usually does happen. So I think we have to assume here that at some point over the next week, we probably do get another test down to around 91.5, 92,000 to test this trend line again. If bulls can hold that level, and certainly this will be helped a lot if we don't have any crazy inflation numbers, some crazy high inflation numbers over the next couple of days, then I expect this level likely gets held, potentially, and I don't know what would cause it, but there's always unknowns around the corner in this market. If we do get some other sort of information that comes out that gives this market a real scare, potentially we do come down a bit lower to 88,000. But I'm thinking it's more likely than not the low is probably in. Right now, I'll give it a 50% chance. And I would say that the inflation data is really the data that we want to get out of the way. When we get to Wednesday evening, I should have a really, really good idea of where we're going to go, because it's going to be, for me, it's going to be pretty apparent at that point, based on the fact that this economic data is out the way, that we're either, we've had some bad data for the markets and we're looking to probably test a bit lower, or actually I can say with more confidence, no, the low is likely in. Trump's about to come into office. The dollar's probably going to weaken soon. Bond yields are probably going to come off. They're probably going to start talking about rate cuts again in a couple of months. Inflation's not as bad as people were expecting it to be. We're back to risk on. And I think this market, well, I know this market can pivot back to risk on very, very quickly. And that is why, I've got this path here. A lot of people think I'm nuts, crazy, like, why are you so bullish here? Like, this could just sort of continue to bleed and chop and melt down and come all the way back down, filling in the CME gap. And we could see like months of, chop and frustration and boring price action and downside. I just can't see it happening. I can't see it happening in 2025 with Trump coming in. The markets really are starting to pick up here. We're not in the summertime. This is not summer doldrums. This is what we've seen happen in the past, time and time and time again. And I do want to just take a very, very quick look at what has happened in the past. I'm going to keep it on the daily here, and let's just go back to last January because we are talking about early on in the year. If we see what happened last January, we can see things are a little bit similar here. We had sort of formed this range, and we came down. We obviously tagged the 100-day moving average that I have been talking about is still a possibility. But really, from breaking this range, we then went and we did about another. That's another 5%. It's hard for me to see that. Is that 5%? Yeah, that's another 5% low from the range that we broke. So, if we go back to where we are right now, obviously all the way up in the clouds, and if we look at that previous low of the range, I'm going to call it around about there, and we do another 5%, then that is potentially going to take us down to around 86,500, so into the mid 80s. So I'm saying potentially we could go a little bit lower here. Without any shadow of a doubt, there is the potential for us to go a bit lower. What I would like to do is I would then like to look at also what happened in early 2023. So again, we're looking at January here. We can see that we had something similar. We had a range in January. Obviously, we then pumped up. We made a high. We actually came down right in March. So actually, if we're looking at, that's actually February. So forget what I'm saying for a moment. What did we actually do in January? So if you look at our January pullback, we didn't really get a big correction in January at all. January was pretty much up only. And in fact, the correction we did get in the middle of January was completely negligent. So yeah, not much we can really ascertain from that year. If I keep on going back, because what I want to do is I want to go back to 2021, and that is obviously 4 years ago. Like I say, believing in the 4 year cycle, you want to obviously track what happened 4 years ago to kind of give us the best idea of where the price is likely to go. And a lot of people have been sort of looking at the price action that happened, obviously, the year after the last halving in 2021. If we just take a look here, we saw the initial sort of sell off down to here, which is 30,200 or so. And then when we actually sweep that level, we actually swept by 4.5%. So not quite the 5% that we saw last year, but 4.5%. So you can kind of see where I'm going with this, but we never actually got a close below the bottom side of that wick there. So you can see we kind of ran up, we got ahead of ourselves, we pulled back, we had this consolidation, we had the sweep, we then made a slightly sort of higher low on the retest, and then up we went. And interestingly, we didn't actually come back down to 100-day moving average. We actually stayed above it from all the way back in October, all the way up until April of the following year. So we had a really, really sort of bullish impulse, a really strong move. And the lowest we got was actually the 50-day moving average. So let's go back to where we are now, go all the way along. And I guess what I'm sort of the point I'm trying to make here is that we're completely in line with the current price action for the low being in. We don't have to go down to the 100-day moving average. We don't have to, sort of break down significantly from sort of the current prices to much, much lower prices. If we, like I say, if we look at what we've come down to so far, we've come down by about 2.3%. Obviously, volatility has been less this cycle. Let's remember that. Corrections have been about 20% on average for most of our corrections. This one so far has not even hit 20%. So, I get why people think we can go a bit lower. Obviously, right now it's 17%. 20% takes us down to 86.5. Remember, that's the number we looked at, which is about 5% from our range low. If we were to come down that low, But potentially this 100 day has been front run. And like I say, maybe we now get some sort of retest, and the retest sort of just comes down to around about sort of 91 and a half. And if we continue to hold that level, maybe we wick slightly below it, sort of scare everyone out. Maybe we double bottom, or maybe we go slightly under it, depending on what our data is going to be like. But I just really think that this here is opportunity. And this is what I said earlier on in the stream this morning. I said, I'm viewing this price action as an opportunity. This is when I'm getting excited. I've been talking to some friends earlier. Everybody's going quiet today. Nobody wants to look at the charts. Nobody wants to really get locked in, or people are just putting their heads in the sand because it's painful, because they don't want to address the reality that's right in front of their faces, that price is going down. What are you going to do about it? How are you going to manage it? For me, this is the time to take action. This is why last week, like I say, I was de-risking, I was selling some positions. This week, I'm attacking. I am attacking these dips hard. I'm buying these dips heavily. And like I say, the first day to attack was today. Now I'm regrouping. I'm reassessing. I'm thinking about what is my next move going to be. Okay, let's see what the inflation data is like. If we get a further sell-off tomorrow or on Wednesday, that's going to be my next time to attack. If prices come back into this box here, of course, I'm going to be starting to buy in on some altcoins and, of course, Bitcoin as well. Bitcoin, ETH, Sol, my main longs in this market. And also, I've talked about some of the altcoins that I like the look of. So with that said, let's have a very quick look at Ethereum. Ethereum has been weaker today. It's still down 4%, but importantly, it has bounced off its 200-day moving average. It has got back above its wick low down to 3,100. So a really nice big flush of the liquidity below here. It's closing back above its key supports. I really like it. It looks really good to me right here. Ethereum is looking good, and this is exactly the sorts of price action that I wanted to see. This is why I've had orders into Ethereum all the way down to 2,700. And if we look at this chart, then what we can start to see here is a bit of a sort of shoulder ahead and another shoulder forming. So an inverse head and shoulders. People are starting to talk about this as a pattern. And, for this to remain, valid, price really has to continue to hold above 2,800. We've seen that today. Do we get more wicks down? Potentially. Look at what we did here. Wick down, wick down, wick down, bounce, wick down, and then we got the big pump. So, this price action was pretty much from the 13th of April all the way to the 19th of May. So this was over a month of price action at these levels. So it might take some time for this market to hang around. Certainly if we get some negative data over the next couple of days on the inflation reads, if Powell comes in hawkish again at the end of the month, potentially we see this kind of price action chopping around for a couple more weeks. Of course, what is the curveball? What is the unknown? It's Trump coming into office. And there has been a couple of stories today about Trump, and Trump, looking to come in, looking to have some sort of crypto ball in the inauguration, looking to discuss his plans for cryptocurrency within his first few days in office. I mean, it's all speculation at the moment, but let's just see. You never know. And obviously, I think people are now realizing, are they prepared for this? If Trump comes in on day one and starts talking about a Bitcoin strategic reserve and his plans for cryptocurrency, is the market prepared for that? Absolutely not. The market is not pricing in any chance of that right now. And it needs to start pricing it in. And I do still think we should see a rally into Trump's inauguration. Certainly, if there's rumors about him talking about crypto and talking positively about crypto and Bitcoin. Obviously, Solana, massive flush, coming down to its 200-day moving average. I talked a lot about it coming into this ascending trend line, coming into this level, and that's where we've seen the reaction from. It's good to see the market reacting at those key levels. Pepe as well, under a bit of pressure, under that 1700 level, but it's hanging on. It's hanging on to this support by a thread right now. It's trying to hang on to its 100-day moving average. I think if the rest of the market sort of pulls around from here, we will see Pepe pull around as well. And of course, all eyes are going to be on the inauguration Sorry, the inflation data over the next couple of days, obviously talking about the inauguration, has put that onto my head. And just looking at some of the altcoins on my leverage list here, obviously, it's a sea of red for now, but a lot of these were down double digits earlier on. They're back to single digits. Of course, there is some green on here, albeit not very much. One of those green ones is Sui. Sui continues to remain really strong, strong bounce off its 50-day moving average. And a lot of people have been calling this as a top. Obviously, we've got a lower high, but Sui remains to be strong, still holding up very well. Obviously, one of the cryptos I talked about the other day on my AI picks video is virtual coming down to its 50-day moving average, getting very close to its 618 Fibonacci retracement. Is it the case that that has now been front run? Potentially nice reversal candle. If we can get up a little bit higher and hold this 50-day moving average, that'll look more encouraging on virtual, and potentially we see a bit of consolidation before starting to mark up higher again. Um, I'm just thinking if there's anything else here that I want to talk about. Popcat is one that a lot of people that I know have been talking about, basically coming down and coming all the way back to the start of this impulse move higher into that sort of 49.50 cent level. So really you want to see Popcat hold that and start to pick up from here. Spectral is another one that I talked about on my AI picks video. So we can see this wick here. It's come all the way down to another area of interest I was looking at, basically coming all the way, yeah, coming all the way back to its close to its summer lows here. What I really want to see for Spectral is to get back above this 7.5 level, this sort of support that I drawn in here. So obviously we've had the big wick, the big flush below. Let's see if Spectral over the next day or two can get back above that level and reclaim it. It's likely we see maybe some deviation and a bit of chop below, but it'd be bullish by the time we get back above this 7.5. Will be bullish, and that will then sort of trigger entries again on Spectral. Just trying to look if there's any others that I've talked a fair bit about on this list. Um, Obviously, we've already talked about Pepe. Render's another one that I have mentioned before. So we've come down, we've basically come in, retested that low. We've got this sort of demand area here, which was our previous resistance from sort of late summer, which we've come in and we've retested, and we've seen a nice bounce from that. So Render's looking quite good. I think I've got near on here, which was another one on my AI picks, which has come. It's flushed this low. We've seen a bit of a capitulation wick starting to print. It might be that we come down to this ascending trend line. I mean, we could arguably tighten that up to make it a line of best fit, and it looks like that is where we're bouncing from right now. So potentially we've got this trend line support in play on near into the 786. I quite like near as an entry here. I think when this market does flip around bullish, it will run very, very hard back to the upside, and some of these altcoins will really, really start to outperform. So look, I probably rambled enough on this stream. Obviously, like I say to anybody that's been trading this, I mean, hopefully you've survived and you're okay and you didn't get shaken out earlier. It's very, very hard to to know what's happening. There's so much information sort of all over. Lots of people getting very, very bullish at the top and talking about like higher prices, myself included. I was obviously talking about sort of higher targets for Bitcoin when we were up here, and then obviously we had to sort of reevaluate and reassess and talk about the potential of us coming down. But I said right from you know the start of December, I said I don't see us going any lower than about sort of 88, 87,000. And so far, so good. We haven't. Obviously, I talked about at the start of December us making a new all-time high at some point in December. We've done that. What I really now want to see is for us to get back above this descending trend line on Bitcoin. So really, that is going to be the next breakout that I'll be looking for as a sign of strength for the bulls. Really, it's going to be a few things. It's going to be getting back above sort of 90, call it 96,000. It's going to be getting back above the moving averages, getting back above this descending trend line, getting back above this high at 102,500. And, with this, we start to get more and more confident that the market is then going to, put in a big move and really, really start to recover. So, yeah, I mean, that's kind of what we're looking for. I think this will probably go something like this. Um, Actually, with the volatility that Bitcoin likes to do, maybe it does something like this. Maybe this is a bit more accurate. Um, and we see like a retest of this high coming down. So yeah, I'm pretty happy with this path as it is. I don't want to adjust this too much. Of course, we could come a little bit lower, but yeah, I'm fairly happy with this as a trajectory. Like I say, I think either this lower is complete or there might be a little bit more downside over the next 2 days. But it's just a case of really surviving what's in front of us right now and waiting for that data to come in, waiting to see how the market reacts. Obviously, having a plan on when to attack the market. Like I say, attacked it hard today. If we do come off tomorrow or Wednesday, I'll be looking to attack again. But until then, it's just really managing risk, making sure, we've got margin, our stop losses are nice and wide because I don't think that you want to be getting forced out of positions right at the start of January or in the middle of January of 2025 when this market, in my opinion, is still about to send throughout the rest of this year, or at least the majority of the rest of this year. We should have or see some really nice price action for Bitcoin and crypto. So I'm going to wrap it up there. Thank you very much for watching, and I will talk to you again tomorrow. Good night.